Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the last week and a look forward at what might happen in the next week. Well, this is a continuation of what we saw starting the first week of the year as the stock market has gone into collapse. We saw the Dow Jones Industrial Average today down more than 500 points at one point, and just a modest rebound going on as I am doing this show. But this has been some devastation. The S&P 500 has been down over 60 points at some point during the day, and again, just getting a little bit of a bounce going on. It was the first day of the year that I came out and said that I thought that the whole range for the stock market would be made this year in the first quarter. That meant we would be opening up very near the high of the year and then have a severe decline in the first quarter. Well, you can see that is what we are getting. We're down 9% for the year and now down about 13% from the highs that we made last year. This has been some devastation. And man, when you talk about 13% on the stock market, it does not really tell the story about the devastation that we're seeing in so many stocks that are getting annihilated just across the board, really, in materials, industrials, energies. It's all over the place, and even the financials are not able to hold up. We're starting to get our earnings reports now, and even good news is not good enough. For example, Intel, they beat today. They're down 8% on the day. Citigroup, they come out and beat, and they're down 6% on the day. JP Morgan beats yesterday. On Thursday, they get a little bit of a pop. They can't hold. They're down 3% on the day. And Wells Fargo, they beat also on their earnings. But there's a lot of fear about, yes, energy loans, and that's where a lot of the problems are in the energy sector. And Wells Fargo down 4% on the day. So this is a period where the market is selling, and if you think there's a reason to be concerned, I think you're right, because the FOMC, well, that's what they've done, stimulated things to the point where they've got nothing left. And if this is a crisis at hand, what are they going to do? Well, potentially negative interest rates, QE4, QE5. I mean, essentially what you're seeing is the result of FOMC actions in the past, where you get male investment and you get speculation, and then the Fed, well, in their grand experiment, they've got nothing left to do. China, of course, still in the focus as their yuan gets very weak, and China has tried to now support the yuan. They've spent a huge amount of their reserves and not able to support it, and maybe you've got a little bit of stability at the end of the week, but you can see the stock markets don't really see that. As China, if their yuan falls very sharply, they're essentially exporting their deflation to the rest of the world, to the United States, and that has to be a concern. Commodity prices all still weak, as we've seen copper break some important supports and head sharply lower. Everybody watching oil. Well, we had the roll on the futures contracts, and then oil plummets at worst point almost 6% on the day on Friday. And if you want to see the big picture on oil, then become a member. You'll be able to watch that in my member videos. Just put it out this week, what I think oil is going to do for this year, and I think you'll be surprised. Gold, really choppy, small down for the week as we've expected, even though tries to get a bit of a rally in a flight to safety here on Friday. The reason is because, well, institutions, they have to raise cash, right? And as they sell all of these things that are denominated in U.S. dollars, and that's why flight to safety today didn't come into the dollar. As a matter of fact, the dollar quite weak. We expected that, and the euro gets a big uptick. We expected 110 in the euro this week on a big up week. And there it is, got up to about 110. So pretty good. And this is a market that, well, you cannot basically close your eyes or step away because something big is going to happen if you do that. Let's take a look at what happened this week as we look at our 60-minute chart of the S&P 500. That is the ES chart, where we look at what happened overnight and during the day and what the background news that affected the markets. So here you see right now, as we bring up our 60-minute chart, on the S&P 500. The gray areas, again, are the areas of the overnight trading, and the white areas are the regular day trading or pit trading time period. So take a look here. What happened on Monday? Well, you could see Monday opens lower, but overnight they get a rally. You could see comes back but can't hold it and gets hit. China gets up 5.3% on the day. And there's a warning there, no V-shaped recovery for them. The Eurozone narrowly mixed, not a lot going on. U.S. stocks, well, they try to bounce but fail again. And oil down 4.5% on the day. That's really what weighed on the markets in here. And Arch Coal files bankruptcy on Monday, and the coals essentially get another big drop on top of their massive declines that they've had. Comes Tuesday overnight, well, they can't do much. They have a sinking spell overnight, but then they get a big rally going as China gets some small gains, and it does act to stabilize the yuan. Eurozone up 1.5%. U.S. stocks rally again and fail. There's so much of these attempted rallies where they give it up and then they try to rally during the day, and this late selling has been coming in almost every single day. IMF comes out and said the Fed hikes need to be gradual. Well, what do you think? Here they are having manipulated the market to the point where the markets can't take care of themselves. Bonds pop on Lagarde comments, and that bonds were very volatile the whole week long. And Anthem, Aetna, Lulu all raised their guidance, so that brings that buyers in and during the day, but nothing can really hold up that well. We get some early buying here on Wednesday. You can see that, and it can't really hold overnight. Now the Eurozone and Japan are stronger. U.S. is up early, but another failure. S&P 500 falls 45 points as just cannot get any rally to hold on that day. A 3% rally in the oil market fails when the inventory news comes out, and the Fed Rosengren comes out and he says world growth is slowing and it could pull down the Fed's path. Well, I've been saying they're not going to raise 4 times this year. I still don't think that they are. As a matter of fact, they may end up cutting again. GM guides up and trading at a 5 PE. Can you imagine that? Why is it doing that? Well, nobody believes in GM, which is a zombie company. It should have never been saved. And a treasury auction comes out strong, so lots of things helping the bond market over the week. You can see overnight on Thursday a lot of waffling back and forth, big moves up and down overnight, and then you get this sell-off on Thursday early, but then a big buying comes in during the day, and this ends up to be the big rebound day. Eurozone, they opened up weak following the U.S. after this big weak day. Japan did the same thing, but overnight, look at this choppiness in the ES market. The S&P 500 E-mini up 15, down 7, up 13. Then they were down early in the morning like 16, and that big upward reversal. Man, talk about trading opportunities. JPM beats, but as we said, they couldn't hold their rally, and the energies and materials, they get a bounce. Now comes Friday. China down 3.5%. The Eurozone down about 1.5 to 2.5%. China economic loan data comes out really weak. Oil takes a big dump, almost 6% on the day. And then a fear, of course, is that Iran's oil is going to come out a lot faster than expected. That beautiful deal that the U.S. made with Iran. CPI comes out down 0.1%, worse than expected. Year over year, 1% decline in the CPI, so there's some deflation for you. Retail sales really weak. U.S. futures crack overnight. They were down 45 points overnight. They try to rebound a little bit but fail. 64 points is the worst level on the downside as of this recording, with a couple more hours to go. Energies, financials, materials, they all lead on the downside. And this SPY implied volatility hits 32. Now that is a high number, and that shows you a lot of panic that's out there in the markets when you get that scramble for insurance. That's what it is when you get those high implied volatilities. People willing to pay anything for puts, right? Because, well, either they're short puts, put options, or they need to buy them to do some portfolio hedges. So scramble, pay any price for them, and that's where you get these big increases in implied volatility. 32 implied volatility on the SPY might be enough to be setting some sort of a temporary panic bottom, but we're yet to see as we look in my short-term view later on. This 9% decline this year in the Dow and 13% overall since the high. I still think it's going to be well over 20% on the downside, and that this first quarter of the year will be a bear market for U.S. stocks. Let's take a look at our calendar as we look at what is coming up for the next week, our earnings and economic calendar. And you can see in here earnings reports, well, they're going to start to pour out pretty good. And you will see here that on Monday we are closed, and believe me, they are going to be happy for that breather, I'll tell you, as we have Martin Luther King Day on Monday. Tuesday, we continue to get a lot of the financial earnings. Bank of America comes out, and that's usually what comes out early. Our financials, Morgan Stanley is another one, and then after the close, the big ones in here are IBM on Tuesday and Netflix on Tuesday. Wednesday, big ones in here, Goldman Sachs, F5 Xilinx, pretty good size companies there. Thursday after the close, before the opening, big one here to look at, United Airlines. Man, is that stock looking cheap. I mean, if it's down at this level, with oil at this level, something is really out of whack. They are believing that there is some economic nightmare coming out there to see United Airlines trading at the level it is. So that's a big one coming out after the close Thursday. American Express, Schlumberger, Starbucks. And on Friday, we get a GE, and that is always a big, important report. Economic events coming out during the week. Well, on Tuesday, now that's not a lot of market-moving stuff. Wednesday, we get the consumer price index right there, and housing starts early on. Philly Fed could move the market because we're going to get some big moves in these bond markets here, as we're seeing going on some of these news. And then on Friday, we get the existing home sales. None of these giant market movers, but everything, of course, always important in an environment like this, where just a little whiff or whim in the market gets markets moving pretty significantly. Let's talk about the best and worst for the week in here. There is not a lot here that I have to talk about as far as the best and for the week. Stocks are getting sold across the board. So there is hardly a big mover out there at all. You're getting some one significant mover that I think we're going to look at here is Chipotle. Chipotle fell from 750 to 400 on all of these problems in their stores with people getting sick, and that was just a total nightmare. Let's take a look here at this Chipotle chart, and you can see what is a classic broadening top in there, and that being a place to wonder when you get these breakdowns about how much this is going to decline anyway. And here you could see in here broadening top that formed right in here, and then when this news started to come out, it really collapsed. Now we're getting this big bounce in here as this is the best mover of the week, like about 9 or 10% gain in there. But again, it's really come from a very, very low level, and that is comes as Citigroup comes out and says that they're going to reiterate their bullish stance on the stock. Well, you're pretty wrong so far, Citigroup, and other people coming out saying, well, pretty safe now to go and eat some burritos. Other stocks that had modest gains in here that are worthy of a look. CTSH, that's a decent looking rally of 3%, and it was from what I would call a perfect spot. Now, broadening top going on in here too, or megaphone top, that you could see a major top forming. But for those of you that understand our cycle analysis, we're looking for a low to come right in here, so that's pretty close to where it is now. And you can see this bottom of the megaphone right there, perfect spot for it to bounce as the cycles start to turn up, and that gets a modest 3% gain. Also, Electronic Arts EA, that stock, we'll take a look here, and this also not a bad looking spot for it to start to get a bounce. We're going to look for this stock in this 60 to 62 area to be actually a buy. And then as you can see, our cycle patterns, we put in these projections on our charts, they're looking, it looks okay, like there is a decent upside move coming in here in EA. So not too bad, but again, this stock and lots of them have earnings reports coming out pretty soon. As a matter of fact, Electronic Arts is on 128 after the close. So that might make this bottom that we're looking for in there in EA. Favorable mentions to the upside, QLogic and Macy's, they get bounces of about 2%, but I don't see bottoms yet in those stocks at all. Exxon up about 1%, not too bad in that pattern that we're looking at, and that's all about the dividend in there, and people wanting to be in some stocks that they can hold on to, and when you have high dividends, that makes sense. So Exxon a little bit up on the week. Now, the worst of the week, man, everything is getting sold as we're talking about materials, energies, industrials, just tons of stuff getting hit pretty big on the downside. There is too many stocks to count and too many to bring that are down between 15 and 25% on the week. There has been some devastation out there. But let's just look at a few of them, starting with the worst of the week. This is the winner, and you get to see a chart that has been absolutely devastated. GPRO, that is GoPro. Take a look here at this chart right over here, and you will see beautiful stock comes down from 98 after its IPO all the way down to 11. Problem is that they have big competition. They come out and warn analysts all over this stock, cutting, lowering. So everybody at this point hates it. Based on our patterns in here, we see another couple of weeks still to the low in here. And it might be a stock that gets a pretty big rebound soon, but this is certainly an ugly picture when you look at that. Got to look at Borg Warner earnings miss, BWA. This stock has, to us, been in a downward pattern. You can see the incredible cyclicality, the cyclical action in here as it rallies and sells off. Look at these cycle brackets in the bottom, and you will see how the cycle analysis works. Rallies and breaks under this level. Perfect, sells off all this time. Rallies and gets up to about a 38% resistance here, and then rolls over and gets hit right down into the point here that we expect a low to come. Maybe another week or two, but I think the worst is over here on the downside for Borg Warner, down 20%. Yeah, I think the stock market's got a lot lower to go, but we're going to get some bounces in some of these beaten up stocks before we get into the next massive downside wave. Take a look at Yelp. This is a stock that we have loved to hate, and this is a picture of Yelp. And this is a stock that, just as lots of people have loved this stock, we have been very negative on it. We saw the bottom come here. Look at the rollover here at the 34-week moving average. This looks like another couple of weeks on the downside. And the ultimate low in here really doesn't look like it's till April. So I think there's a lot more to go in there. B. Riley says this stock is a sell. SLM said this stock was a sell long ago, as it was on my riskiest list last year. Take a look at the short-term pattern in here. Why do I want to bring up the short-term pattern? Because I just showed you that rally that went up to the area that I thought it would go up. Look at the inverted head and shoulders that forms in here, and the measurement on the upside was right up to here. Beautiful. That even exists in a downward trend, and right over here the slim ribbon turns negative right there. It was positive here, and you can see all of the selling going on here in Yelp. So this one is one of them that was in bad shape and continues in bad shape. Interesting one, Express Scripts. Anthem comes out and says they want to renegotiate their contract with them. Express Scripts is a hospital benefits manager, and of course these HMOs, hospital stocks, they are going to be under huge amount of political pressure, and so they're coming out and renegotiating or wanting to renegotiate with Express Scripts. Anthem probably is not going to be the last one in here. They probably were not the first one. We just didn't hear about any of the other ones. And ESRX is Express Scripts, and we'll take a look at this chart. And take a look here. This has been a chart that just turned down from the perfect spot. Here is the resistance zone that you can see that it moved right up to right there. Notice the cyclical patterns in here. Big patterns and smaller patterns. Here is the small pattern right in here, the rally, and then the big break. The nested lows right in here. We're expecting a low in March, likely to be a lot lower. And I would say if we get a bounce in here in Express Scripts, this is one that I want to sell. Take a look at this weekly pattern right in here. It's had a hard time getting any momentum going on the upside as it moved sideways for all this period of time. Breaks solidly and gets a negative momentum signal right there, and you could see this selling in there. So Express Scripts, one that does look really, really horrible. I mean, basically, this is a market that is having a huge amount of selling, and I'm telling you, we're going to get some bounces in here. But you have to really be concerned that the stock market in free fall right now is going to have more of these phases ahead because, well, there are problems out there, and we have a Federal Reserve that has mismanaged this all along, and they are plain impotent right now. So sadly, the markets are on their own, and the only time the Fed should be around is to help manage a crisis situation, but they blew it. So that's it. We're going to wonder now, was the stock market falls? In your mind, you're probably thinking, well, if I followed Slim, I really saved a lot of money here. I'm getting a ton of emails on that. And wondering, well, is it time to invest or is it time to still be cautious? Well, you just heard what I said. I think you stay cautious. And when the market rebounds, I think you sell. We got some interesting questions this week, and you're going to see them in a moment in our emails and tweets. Emails and tweets. Well, a lot of people focusing on some of the stuff that we are. We'll get right to it. KC writes me, wants to know about two stocks. KC, I'm going to use your name. That's Kyle, a great contributor here. Really writes to me with some quality stuff and learning a lot about the style of analysis that I do. So keep it up. Asked about Costco and GOLD, Rand Gold. Let's take a look at this Costco chart here. And what he asked was there a cycle breakdown in here? So this is a good opportunity for people who have not seen my type of analysis yet to take a peek at what a cycle breakdown means. Take a look here at this Costco pattern, COST. Note in here that on our charts, and if you want to get these charts, you can just subscribe to our level 4 for your TOS platform. There always have our annotations and cycles. Now this one happens to have colored phasing in it. We don't have it in all of them, but to give you an idea of what that looks like. Green phasing is the rally phase. Yellow is the corrective phase, and if it gets into red, it's gotten below key lows, and that is the negative phase. So what we have in here, you can see, is that we had a rally. This is the cycle bracket down over here, showing you the ideal, and a powerful rally. When you get this modest correction, it says you're going to get to a new high. You can see you did that. We had the fib extension in there, which it got almost up to the top one, that level, then had a bearish engulfing pattern and set a top. So the cycle breakdown that Casey is talking about is this low right over here. See that key low right there? When it rallies and then breaks down and the peak is made on the left side, you can see the left side of this whole cycle. That's called a left-hand translation. We just did a piece in our tools for text for members about translations. This is real good information. So when you get this rally to the left side of the cycle and then you break down below the key low, you can see I have the line right in there, that sets up a decline for, well, all of the rest of the time. You can see that in here, and we have the different supports right in here, and wouldn't be a bit surprised to see 140 on this stock. It's now trading at 151. So yep, Casey, I'm in total agreement with you. That is a cycle breakdown, and Costco COST appeared this week on our setups for a negative trade in our rankings and setups. So totally on the same page with you. Good one. You also asked me about Rand Gold, GOLD. Going to bring this one up, and of course what you said to me was the slim ribbons look like they're in a buy area, and I see some other things in here that are interesting. So first of all, if you look at this on the weekly chart, that we will see these two blue spikes here. That tells us the time frame of when we expect the low to come, right in here. And you could see this hammer bottom right there. It's trying to make a low, and this does look like it's ready to get a move on the upside. The problem, there's a couple problems in here. First of all, before I talk about problems, let's take a look here at what you were talking about on the slim ribbon. The slim ribbon has been actually just dancing around this 89-day moving average. That's this right here, and it's had a lot of chop. So I don't see a lot of information coming out of the slim ribbon right now. It was bullish, it's now neutral, so not much there. You're going to need to get above this level right over here. So two things that I don't like. First of all is that you have this bear kicker. That's this big rally that got up here, and then the big gap. You see that gap right down there, and it brought the sell-off. So that, declares a pretty good resistance area. It failed over here at 65. It failed over here at 66. So there are some issues there on that pattern. Another thing to consider is that, well, the stock market's getting hammered, equity markets around the world, and yeah, we're getting bids in gold now and then, but gold's been struggling in this area of resistance just over 1100, getting good support in the 1080 area as expected, but kind of in this tight range. And if we get into a real liquidation phase in the stock market, and we're seeing today on Friday some massive selling going on, that what happens is that the deflationary forces even hit gold. We saw that happen, especially in 1987, where, well, gold looked good for a little bit, but then it collapsed. So got to be careful about massive liquidations, and that could hold back the gold stocks, which I think are setting up for bases. And we're going to look at a couple more of those in just a couple of seconds. So great question, good information. GW writes me, and he said some time ago actually GW is a she. Some time ago you had mentioned that China would bottom in February. That would be the last time that I did the country ETFs and looked at all of those. I'll do that again soon. And I wanted to know, is that still the case? So, of course, we've seen China just absolutely coming apart. We're going to put up a weekly chart in FXI, which is the ETF for China, and you will see in here what I was looking at and why I thought there was a decline coming into February. Take a look at this chart right in here. This is beautiful. So this is the country this is the ETF FXI. And essentially a China index fund, and what we have here are the weekly cycles. So there's a big cycle pattern in here, and then a smaller cycle pattern that you could see right here, this blue one. There's a little note to myself right here: expand to 10 years for the proper alignment. So I'm going to do that. I'm going to go to 10-year weekly, expand out, and I'm going to come back. And there you could see how these things line up. So now you can see that this big decline you see came from here last April, and then had the big break. It got up right to the retracement resistance zone. Look at that beautiful thing. And then it started to roll over. So what I had was, well, we call this nested lows coming out here into February, and I thought the decline would come right into that time period. You could see in here where there was a nested low, and it came around right in here, and here there was a nested low and came down right in here. So nice alignment, and look at that. We're getting to the point where here we're coming into February, a low is due in China. We're going to expect that to come, and yes, I do expect this to come, and I do expect that to be one of the ways that the stock market here in the U.S. gets a bounce. But I think that bounce will only be temporary. So that is a look at the FXI and how, based on the cyclical patterns, it called for this decline into February, and it is doing it perfectly. I get a tweet from Mike Wells, and Mike Wells wants to know, is the ZS, the soybean market, does this have more bear juice, in other words, more on the downside, or is it going to stall here on the downside? Well, just a little tip-off in the last couple of days on our rankings and setups, we put out soybeans as a long side entry. So you can still go through this Sunday and see that at no cost by going to the askSlim website and resources on the top and rankings and setups. After that, well, it's going to be totally a member service. So what are we looking at here on the cyclical patterns in ZS? Take a look here at the weekly chart, and I'll show you in here that there is this red zone that told us that it was going to be weak, and you can see it's been weak all the way through this period, but not giving up a lot of ground. So when it doesn't give up a lot of ground in a red period, you see it did so in here, and you can see it did so in here in a big way. That's a pretty good sign that, you know, this area is getting some support. Now we're getting into this area where it's turning up. Now, if I zoom in on here, just these last couple of cycles, you will see that this is a morning star that's being built in here on this weekly chart. That is signs of a bottom being formed in here. You could see right in this mid-cycle area a morning star that came, and it had this pretty big bounce. Up there, 34-week moving average here is a pretty good resistance number, which comes in at 910. So we're now trading at 876. Based on the weekly, I would be looking at that as my potential first upside move, 910. Now here you can see an inverted head and shoulders forming, and when I look here on the daily chart, there's several things to look at in here of value. First of all, double bottom formed right in here, engulfing pattern right in here, a morning star right in here. This is the neckline, and I think over this 893 area is going to be a breakout in here, and the slim ribbon turning positive momentum right there. So a lot of things pointing to a potential bottoming going on in here, and that's why we listed it on the rankings and setups as we call this a level 1 long out of 3 levels, and that's because it's just turning up on the bottom. So it's only a small commitment, and just getting it on our radar and showing up as a potential long side trade. So ZS, you asked me about that, Mike. Is it more bear juice or stall here? Well, not only stall here, but I think a reversal coming on the upside for soybeans. ML writes me, asks me a couple good questions. Also get some great things from this member. Wants to know from me about Candy. And Candy, KNDI, I'll put up that chart in a sec, and makes a couple of points here about things on the charts. Candy is an EV company, electronic vehicle, a company out of China, very well supported out of China, and they unfortunately have been suffering with the whole Chinese scenario going on out there. So take a look at this candy chart, KNDI, and we'll take a look at what ML is looking at in here. So first thing we're going to look at is the weekly chart, and there are cyclical patterns here in candy, KNDI. So here are the cyclical patterns, and you will see the key lows that are in here, and it makes each of these peaks and troughs in the cycle pattern. So the key low right over here, key low right over here, and right over here, and you can see that it is still coming down right there. So ML says that it came down and retraced to the 50% Fibonacci. You can see that that is actually right over there. Also, the 34-week moving average, which is often support, just getting under it right over there. So you can see those are pretty key areas. Let's look a little closer in here. You have the 61.8% fib at 745. And he says the cycle action looks good in here, though it is on the weak side of the cycle. In other words, the declining portion. That's true. This comes out to, let's call it, second week in February before that low comes. What other analysis do you see that actually has this timing in here? I got to ask you about that. And so the low doesn't really look due until mid-February. But I think basically your analysis is pretty much spot on. Wants to know, typically, do I wait? Would I respect the cycle, that it still has more time to go, and or start to accumulate and wait? Well, the truth is that this has a lot of time to go, a whole month in this week's stock market, so I'm really not in a hurry. You mentioned the 89-day moving average, and you can see in here that it's gotten below that right now. The slim ribbon, which was positive right here, and you can see positive right here. So here it was positive, here it neutralized right there. Here it got positive again, but look at it's turning negative here. So everything that I look at here in candy says to me there's no hurry in this stock, and I think that we will probably wait. It might be another month or so in KNDI before that bottom sets in place. And remember what we talked about in China was that there was a low due pretty soon, and that's going to line up probably with this low in candy right over here. Also, he asks me about my choices of selections of some of my top stock picks for the year. When I did my year-end analysis, asked me about specifically GDX and Newmont and PAAS. Why did I choose those? Well, first of all, for that scenario to come to play, of those being the best stocks of the year, we're still going to have to see the gold market solidify and move up as I've expected. Watch my year-end forecast that's out there on YouTube, and you will see that I'm expecting a rally in gold later in the year. Now, the GDX, simply I choose that because it's the best way to have diversified holdings in the miners. Now, why did I choose the two that I did, specifically the stocks of Newmont, NEM, and PAAS? Newmont gold stocks predominantly. PAAS, Pan America, is a silver stock, so I wanted to have one in each. Take a look here at Newmont, NEM, when I put up this chart. And what's going on in here is pretty significant, and that is what we call a cyclical base being built. What makes a cyclical base? Well, it's essentially after a big decline, you get a rally and then you get a sell-off that doesn't make the low, and what you do is establish an upside trend. Now you could see the cycle forecast in here, which calls for this decline right to this period and then a rally coming, and you could see the hammer bottom in here. So this is a base that's built in here, and it looks like the next move is up into this resistance. We'll call it 22 to 23 on the upside. In Newmont, PAAS, you're going to see a similar pattern in here as we blow it up. There's that big base being built. So what does that mean based on cyclical patterns? Well, you have a big downtrend right over here, right? You could see that channel coming down right like this. But if it's not making the low, then that big source of downside pressure is flattening out, And then if it gets above this high, up above about 880, then it means that the big cycle has then turned up like that. So you could see the double bottom or base forming in here, and that is a good sign for PAS. Also, through research, PAS, Newmont, both of them are some of the stocks that have the lower production costs based on all of the gold and silver mining stocks out there and solid reserves. So that's why I picked those two. And man, that was a great question. Last question, as PC writes me, and this is Paul, and he often sends me some great stuff too. This is just a super question. Question is, you said, Slim, that being you're a libertarian and are aware of the flaws in our monetary system. Well, you can all ask me about those. I know you're aware that many of your colleagues, the analysts out there, are preaching the need for owning physical gold or silver as a doomsday investment. I don't see much value in the physical owning of these metals, PC says, and he says, do you see things differently? Well, there's a few things here. First of all, there are doomsday scenarios that owning gold and silver makes sense. First of all, if we have a runaway inflation, if there are capital controls, and society did not trust the paper currency, and we were only transacting essentially in barter and using hard currencies for transactions. This is, somewhat of a far-fetched scenario. If it did happen and you wanted to go out and buy a loaf of bread, you might just do that for one silver dime. And I guarantee you're going to be buying that loaf of bread from a baker who also is holding a gun. So, yeah, that's a doomsday scenario and really far out there. The question is, for an insurance policy, what do you really need? How much gold, whether it be in physical gold and silver or just as an investment? Well, history, based on what I have read, shows that there have been 9 scenarios, 9 countries in the last 220 years. That's 220 years that have had these scenarios, hyperinflations. So, like, it does happen, and if there's any country that's headed that way, especially, forgive me for this, with liberal Keynesian ideology that's in control of our country right now, it could happen here in the U.S. Maybe it's down the road, but still, it's a long shot. I think that if you want to hold physical gold, maybe it should be 2% of your net worth. That would be, gold bars, gold coins, junk silver, those kind of things. Because in that crazy doomsday scenario, that's what you'll need to transact business. I think that for investment purposes, 10% at max of your total allocations to investment makes sense. Again, if this happened, 10% of holdings would, believe me, cover everything in a hyperinflation that you own, because gold will go up more than 1,000%. So that, again, not a prediction, just simply the doomsday scenario that you're asking about. That's it for emails and tweets. Thanks for some great questions. And as far as gold, well, that's part of my short-term view, which is coming up right now. Before we get into the short-term view, I want to remind you about the no-cost trial period that we've been in for our new offering, Rankings and Setups. We take the best tradable 70 stocks, ETFs, futures, and put them all on one table. You get to look at 3 different time frames, shows you the long-term momentum, the short-term setups that are going on, and multiple studies that we use in our short term. And right in the middle is our intermediate term, which has our cycle analysis on it. Beautifully colored, really easy to read. And then every single day we put up our best setups for potential trades. So you don't want to miss that. Just 2 more days now through Sunday after today of our no-cost trial period and get a good look at that, and then subscribe. I think it'll be really beneficial to your trading. All right, short-term view here. We're looking only at daily charts right now, and that's what we do in our shorter term view on our rankings and setups. Look at daily charts and add in some intraday studies also. In this case, we're going to look at the 5 different markets that I look at every single week in a short-term view, plus look at the VIX also. So we'll start out with light crude. Now, we're going to only give ourselves a 50% for the last week. Now, I hate to say that because we're so right on, spot on in this decline in the stock market for perfect timing of it. But our little short-term estimate of what was going to happen last week was wrong, so we're not going to get credit for that one. We did really well in gold and in the euro. We're going to give us only a half right in the bond market because it didn't dip down to the level that we expected it to. We thought it would dip and then go back up. Well, it had a little bit of a dip and then went up all week long as there was a panic in the stock market. So let's take a look here at light crude. And what we have in here is it's revised a little bit for those of you that get our charts. What happened was we had the roll. You can see I have that marked off in here. So the fib extension right over here, the 100% fib extension, is at 29.73 based on the new contract. So that's where an important support number is, or target number, and you could see we got down to 30.06 on the new contract, and that was down a ton, like almost 6%. It's funny how that happens when you have the roll and you have a situation where the further out month is a higher price than the near end month, and it's under pressure. All of a sudden there's a collapse when the roll comes, and there you get that big decline. So when you have that contango situation, that's what happens. So the support was right over here. Here we have the 10th day coming down right over here, if we have these count right, from this little down low right over here. Really tough to read at the end of the year. We believe it's going to have an up week this week and get up and test this area of 32.30. That's where this small resistance is right there. The bigger one up here is at 33.88 or so. I don't really believe it's going to get up there. That's the 89-day moving average coming right down in the middle right over there. I'm sorry, 13-day moving average, 89 is way up here. So I think that it's going to be tough levels to get up to. We're going to look for this week to be a small up week, getting up and testing that 32.30 number. Don't miss our big picture on the oil market. I think it's a really good analysis, and this other big thing over here, I think when that's over with, it's going to be very meaningful. So take a look at that. So next thing we're going to look at is the gold market. We got this one right. We thought it would be chopping to the downside, and if any buying came in, it would just be modest. And that's basically what we got. Let's just move in a little closer in here so you can see. So what we're really looking at is a test this week of this support level again. It's 1072. The way this pattern shapes up, it really looks like this, right? That's the cycle that I just put in there, and then up again. That's really the way that pattern is suggesting. So we're going to look for a test of this 1072 support and then up again. It probably has a few more days in here of this downward chop. If the stock market gets a rally, we would expect this to pull back a little bit. You can see with the stock market falling apart, this didn't get much of a bid, did it, as a flight to safety? So we think we're in this corrective period and likely to be for a few more days before that's over with. We're not looking for very much of a move this week overall. We're going to call it just a small downward bias with, if that happens, then maybe an upturn towards the end of the week. Next thing we're going to look at /6E. That is the euro currency. We were looking for the euro currency to break out of a little consolidation it was in, move to the upside, get up to about 110.10. Well, 110.10 is right up over here. You could see that tail today as a ton of buying came in as they sold $1. So it did break out of that little trend there and got up right over here. Now, you could see what we're looking for here is over this next week, it's kind of a sideways movement in there. You see that? This is the cycle pattern that we're looking at right in here and then turning up again. That's what we have the forecast right there. So we're going to look for this kind of sideways chop in here, probably testing this area above 110 again, and then rolling over. Small upward bias, maybe for the next 1.5 weeks, just in this sideways consolidation between the area of right around 108.5 and 110, and then after that looking like it has a potential to move to the upside again. So overall, we're going to just look for a small upward bias or sideways chop in here, not a whole lot based on these patterns. Now we're going to look at /ZN. Now we were looking for a break in here that could be bought. We thought it would just have a pullback, and that was based on this smallest pattern right in here. Now we were looking for it to stop like right in this resistance zone here. Now that's interesting, that's where the new support is. And then roll over. So you see this pattern right in here. That's what we saw right here. But with this collapse in the stock market, you got a ton of flight to safety bid coming in, and it broke through all of these resistances that you can see right here and really surprised us. We had a short-term setup for that's a level 1, a very small one for a small downside trade in here. We still think that's coming, and we're going to look for a few days on the downside. We're going to look for a test of 127.18, this new support zone right over here, and then turning up again. And man, we're going to be so out of our little short-term trade in here if we can get that pullback, because we don't think it's going to last all that long. And that would be reflective of what we think is a potential little upside tick in the stock market. So we'll call the bond market testing 127.18. And then up again, and that's probably going to be just a small down week for the bond market. So let's talk about the stock market. Stock market, of course, got really hammered. Now, it's extended down in a longer period of time than we've seen in a while. Now, what that means is that either there's a capitulation selling going on, or that we've had what was just a ridiculously small little rally early in the week, and that's all we're going to see, and every single rally will continue to fail. Now, we warned last week, we said that it had likely going to test a resistance at that time, which was 1993, and then that it was huge probabilities that rallies would stop and they would fail big time. We thought it would be a small up week, actually, in a little upward corrective process. Totally wrong. So we got the stock market wrong. I hate to say that, because again, we were so right overall on the big picture in the stock market, but sometimes when you look at these little wiggles in the market, you can't exactly get them right when you've got the enormous pressure on one side or the other. So we're going to take a look here at the S&P 500 SPX, where we do our analysis on the stock market. Oh, if you get our charts, we have it on all of the indexes, and I want to show you in here two scenarios. This is not it might go up or it might go down. This is it'll probably go up and probably go down. But the question is from what levels and how to read the short term. And that's what we're going to look at here. So we have sent out 3 links in the last week of our charts to our subscribers because we could not keep up with the changes that had to go in here constantly because of how much the market was falling in here. We keep having to put revisions in here. So here you're going to see our question mark, and that is, in an extreme situation, could we be at day 18 in a low? Note this big green line. That is the October 15 low. Note that we broke it today and are now bouncing above it with just less than an hour to go in the trading session on Friday. So here's the question. Is this all extending one cyclical declining phase? Or did we happen to see an unbelievable, what we call left-hand translation of just this little day-and-a-half rally that is now going to continue down like this? If that is the case, then the way these patterns shape up, is that you could get a rally to this minor resistance. We're going to call that one at 1912 and then fail because the rallies can't hold. If this scenario is the more positive scenario, it gives you a rally up here into this major sell zone, which I really would love to see happen, beginning at about 1942, and then turn over for more major whackage on the downside. So what I'm looking for this week is this rally, 3 or 4 days, we'll call it. It probably finishes the week a little bit on the upside. But overall, big choppy market still, rallies that can't hold, attempted rallies. I'm going to pick the more negative scenario in here, that it gets up to this 1912 area at this minor resistance and then rolls over again for more on the downside. If we're ultimately picking this decline to be well over 20% on the downside, these rallies, if I'm right, they're going to come and they're going to continue to fail. This selling is likely to keep coming in, and we're just in that kind of market right now, and I think it's going to be a significant issue for investors, especially if they're buying these dips and getting hooked by that, because as you could see, their rallies are just going to keep failing, and I think that's the situation that we are in. Don't forget, last chance, go check out the free look at our rankings and setups. Just go into the askSlim website, go to the top where it says resources, rankings and setups, and you'll see what that looks like. And subscribe. That allows us to keep bringing this free show and bring you all the information that we can to raise your probability of success. I hope this is a good week for you coming up, and I am always wishing you great trading.
Well, I'm going to sit and I'm gonna do a silly show.